Hello and welcome to Commodity Champions, and what a week it has been, where we have seen a sell-off come in equities, commodities and other asset classes as well. But there has been one sector which actually saw some good coming its way, and in form of government measures. Well, the sugar prices are trading on the higher side, and this is on the back of import duty being hiked from 50% to 100%, and the government also has come out with a reverse release mechanism for the sugar mills. So if last year the sugar consumers had it good, this year around it is the sugar mills that the government is looking to support. Joining us now on the show is Kunal Shah of Nirmal Bang Commodities, Priyank Upadhyay of SSG Finance. But we will talk about the sugar prices first, and for that let's get on board Director of Balrampur Chini Mills, Vivek Saraogi, and Director General of Indian Sugar Mills Association, Abhinash Verma. Gentlemen, hi, thank you so much for joining us. As I said, let's talk about sugar first, because there is so much happening on to right now. Vivek, coming to you first. The government is working for the mills as it puts the release mechanism in place to support the prices. How do you see it? Is it really, coming back to controlling the sugar as a space which we saw decontrolled long back in 2012?
See, Manisha, if we see what happened last year, the government behaved very responsibly in favor of the consumer. They said that you cannot hold more than so much in October and November. Those are the festive periods and the lowest stock period for the year. Now, when you have got into a surplus zone, mills are just, running over each other on a panic fear factor. The government has come out with the same measure again for 2 months. It's February and March, when the stock is going to be the highest in the year. So I appreciate this measure. I think it is a rational measure. The price has already reacted to it. Mills, UP, like we were selling at sub 31 prior to this. Then after the clubbing of these two announcements, prices have moved up to above 32. Now these are prices, Manisha, which are still way below cost. So I think this measure was in good time.
Well, yes, that point is well taken, because we have seen the sugar prices actually decline by 15% in this season, while the cane prices were surged or hiked by 11%. So yes, of course, there has been a bit of a mismatch there. But Abhinash, coming to you, will the limits ensure on one side, of course, that you will see a price rise, but that would also mean that the mills will be holding higher stocks here? How do you see that actually calculating on itself?
See, there is a certain limit to the sales that anybody can make every month, because the market takes what it requires. And if you look at the average sales that can happen, the market requires around 20-21 lakh tons every month. So if somebody tries to sell more, the market doesn't take. And in fact, if the supply is more, the prices keep continue to drop. And that is exactly what has happened in the last 2 months or 3 months. The prices have come down by anywhere around 6 to 7 rupees per kilo, because people were trying to sell more than what the market was able to take. So what the government has done now is a reverse stock holding limit, and has put a maximum that each sugar mill can sell in the country. So at least the distressed sugar mill who were trying to sell more by dropping prices will get controlled. And not only will the market sentiments improve, but what will happen is people will not be actually selling more than what the market is taking. That is number one. Number two, now that we are seeing that the prices have started improving for the last 3 days or 2 days, and improved by almost about 1 to 1.5 rupees, the stockists and the traders will now find some interest in the market. They might buy something more for stocking purpose. So the demand, I believe, could be more than about 20-21 lakh tons. But this method of controlling the sales by sugar mills by putting a restriction of 17%, the numbers work out to about 20-21 lakh tons. So the supply will get controlled at 20-21 lakh tons, but if the demand is more than that, the prices should slowly crawl up.
And that, of course, is something that the industry is looking at. But Vivek, coming back to you, as a mill, of course, the holding capacity that you would have to hold all of that sugar, would you say that now that you are being restrained for the next couple of months, what does that mean for the mills holding on to that kind of a sugar? So are you looking at those kind of rise in sugar prices that it can compensate for your holding?
Yeah, see, Manisha, you've hit like 2-3 separate points, though they're connected. See, if you cannot sell all your sugar in one day, the panic situation was leading to lower sales and lower prices. Post some discipline, you will see higher sales with higher prices because you're scaring away the trader. So it's a psychological move. It is a good move. And the fact that if you have to restrain yourself for 2 months, it's not bad because you have the genuine high demand period coming up. So I don't see this as, strangulation, because you sense, there is extra production. Yes, there is. Next year there will be more production. Yes, there will be. But these 2 months disciplining will get you to a basic price level. Thereafter, one looks forward to, exports from the government, assistance there, some assistance from the state. So, you live to, you stay another day. You live to play another day.
Well, yes, don't you? But, while, of course, the government has been making a lot of measures, Vivek, import duty has been hiked to 100%. There is also export duty that could be scrapped, which stands at 20% right now. There could be some actual measures coming in for mills to export as well. As you said, this is more sentiment than actual. Would you say the actual measures that the markets would see in sense of numbers, is that something that could actually go forward and support prices?
Manisha, commodities are, a lot sentimentally driven, speculative driven. So yes, these are sentiment positive measures. Export duty doesn't exist because the day the government will come out with a subsidy for export, the export duty is meaningless, It's just a notification which has to be overturned. So I don't see that export duty removal as any sentimental measure also. But yes, the major thing which would be now needed to be done is to evacuate the surplus. We are in dialogue with the government. We've already requested. We've put up, sort of plan request in place that this is the production, etc. I think, we are in dialogue already.
So, Vivek, what I take from that conversation really is that, yes, you guys are constantly talking to the government. There have been measures that we have seen come in on this week. But as you rightly pointed out, much that has been done would be to discipline, is more psychological, sentimental in nature. But Avinash, coming to you, how does that calculate or weave its way into prices then? Of course, we have seen a knee-jerk reaction coming in for prices. But how much longer and how much higher do you see prices moving from here?
Number one, since there is surplus production this year and an expected surplus next year, obviously the prices will be under pressure. So difficult to say whether it's going to improve by 2 rupees or 3 rupees or 5 rupees. That's a very difficult estimation to make today. Talking about the global market, I've just come back from the largest sugar conference in the world, that's in Dubai. All the top traders, all the top producers are there. And we got some news from Brazil that Brazil might be reducing their sugar production in this season that they're producing from probably April or May when they start. And they might reduce their production by anywhere around 3 to 4 million tons, mainly because the crude oil prices are improving. And because of that, the ethanol prices might be lucrative for them. And therefore, 3 to 4 million tons might get moved out of sugar into ethanol. So that space of about 3 to 4 million tons could give some kind of a fillip, some kind of a push to the global prices, and there could be an opportunity for India to export some of the surplus.
And it's not just India who's looking at a surplus this year and the next year as well, as both of you have pointed out, but the global markets are looking at a surplus as well. And the latest reports show that at around 8 million tons for the next year. Vivek, with those numbers in mind, what is your sense on the prices then?
It's very difficult to hazard a guess. See, we were at I've mentioned to you, we were at a low of 31. We are 32 quarter. All I can say is probably after the month of April, this should move up. From now to April, maybe around this range only. After April, move up. But not move up to earlier levels. That's not, won't see that for 2-3 years again.
Well, I hear both of you that the prices will gain, but not too much, especially when we are looking at a surplus for the next year as well. But before I let you go, Avinash, one more word from you, and this is about the big gap that we see in the ex-mill prices and the retail sugar prices, because even as the ex-mill is trading at 30-32 rupees per kg, the retail is still holding around those 45 rupees per kg marks.
Yes, you're right. The ex-mill prices have come down by 6 to 7 rupees in the last 3 months, but the retail prices have come down by around 2 to 3 rupees only. The market generally says that the retail prices are generally downward sticky. So somebody who has bought at a higher price doesn't bring down the prices as fast. So there is always a gap. I don't know how this gap can be reduced. There was a proposal, or there can be a thought, that if you add a cess on the consumers, because the big consumers or the large consumers are getting an undue benefit or a big kind of a drop in the sugar prices. So therefore, if you charge one extra rupee or couple of rupees of cess and collect and give it to the farmers towards the FRP, that will not only reduce the gap, keep it at a normal level, but will also ensure stable prices in future, and yet give some revenue to be given to the farmers as part of the cane price, which will also give relief to the sugar industry. So what I suggest is, whenever this gap between ex-mill price and retail prices become too large, then obviously somebody is making some extra profit somewhere. Why not take a part of that and give it to the farmers?
Well, that's a valid point, but that is the big sugar discussion that we slated for you. Thank you so much, Vivek and Avinash, for joining on to this one and explaining to us on what it really means. So the import duty hike, the export duty scrap, and of course the discipline coming in via the release mechanism are some 3 factors that can support sugar prices going forward. Good one for sugar prices and of course the sugar mills as well. But with that, let's slip into a short break. We will discuss about the moves in metals and crude on the other side of this short break.